we are going.
Hey everyone, welcome back to our channel where we talk about all things related to finance and investment. In today's video, we are going to discuss Robert Kiyosaki's rules to invest in real estate. Robert Kiyosaki is a renowned author, entrepreneur, and investor who is best known for his book Rich Dad Poor Dad, which has sold millions of copies worldwide. Rule number 1. Educate yourself. Robert Kiyosaki believes that education is the key to success in any field, including real estate investment. You need to understand the market, the different types of real estate, and the various investment strategies that you can use. You can start by reading books, attending seminars, and networking with other investors. You can start by reading books on the topic. There are many great books written by real estate experts that can provide you with valuable insights and strategies for success. You can also attend seminars and workshops to learn more about the real estate market and different investment strategies. Additionally, networking with other investors and professionals in the field can help you gain knowledge and insights that you wouldn't be able to gain on your own. Rule number 2, focus on cash flow. Kiyosaki believes that cash flow is the most important factor when it comes to real estate investment. You should invest in properties that generate positive cash flow, which means that the income from the property should be higher than the expenses. When investing in real estate, it's important to focus on cash flow because it's what will ultimately sustain your investment over the long term. To ensure positive cash flow, you need to carefully consider the income potential of the property you are investing in and the expenses associated with it. This means factoring in expenses like property taxes, insurance, maintenance costs, and any mortgage payments. By investing in properties with positive cash flow, you can generate income and build wealth over time. Rule number 3, use other people's money. Kiyosaki suggests that you should use leverage to invest in real estate. This means that you should borrow money from lenders or investors to finance your real estate projects. By using other people's money, you can maximize your returns and minimize your risks. Using other people's money allows you to invest in real estate properties that you might not be able to afford on your own. This strategy is called leverage, and it can help you maximize your returns by increasing your purchasing power. However, it's important to be mindful of the risks associated with using leverage, as it can also magnify your losses if the market turns against you. Rule number 4, have a team of professionals. Real estate investment is a team sport, and you need a team of professionals to help you succeed. You should have a real estate agent, a lawyer, an accountant, a property manager, and a contractor in your team. When investing in real estate, it's important to have a team of professionals that can provide you with valuable insights and expertise. A real estate agent can help you find properties that meet your investment goals, while a lawyer can help you navigate legal issues and contracts. An accountant can help you manage your finances and tax obligations, and a property manager can help you manage your real estate investments. Additionally, a contractor can help you with renovations and repairs. Rule number 5, invest for the long term. Kiyosaki believes that real estate investment is a long-term game. You should invest in properties that will appreciate over time and generate passive income for years to come. When investing in real estate, it's important to have a long-term perspective. Real estate properties are not typically short-term investments, and it can take time to see significant returns. However, if you invest in properties that appreciate over time and generate passive income, you can build long-term wealth and financial stability. Rule number 6, diversify your portfolio. Kiyosaki suggests that you should not put all your eggs in one basket. You should invest in different types of real estate properties, such as residential, commercial, and industrial properties, to minimize your risks and maximize your returns. Diversification is a key strategy when it comes to real estate investment. By investing in different types of properties, you can minimize your risks and maximize your returns. This means investing in properties that have different income streams, different tenants, and different geographic locations. By diversifying your portfolio, you can spread your risks and avoid the pitfalls of having all your investments in one property or one location. Rule number 7, have patience. Kiyosaki believes that patience is a virtue when it comes to real estate investment. Real estate is not a get-rich-quick scheme, and it takes time and effort to build a successful real estate portfolio. When investing in real estate, it's important to have patience and a long-term perspective. Real estate investments take time to mature, and it can take years to see significant returns. Additionally, the market can be volatile, and it's important to be patient and wait for the right opportunity to come along. Rule number 8, take calculated risks. Kiyosaki suggests that you should take calculated risks when investing in real estate. This means taking risks that are based on sound research and analysis, rather than blindly jumping into a project without proper due diligence. Taking calculated risks is an important strategy in real estate investment. You need to be able to identify the risks associated with a property or project and assess the likelihood of those risks materializing. Additionally, you need to be able to weigh the potential rewards against the potential risks and make a decision based on sound research and analysis. Rule number 9, be prepared to learn from failure. Kiyosaki believes that failure is an important part of the learning process in real estate investment. You should be prepared to learn from your mistakes and use those lessons to make better decisions in the future. Real estate investment is not always smooth sailing, and there will inevitably be failures and setbacks along the way. However, it's important to view these failures as opportunities for growth and learning. By analyzing your failures and learning from your mistakes, you can develop a deeper understanding of the real estate market and make better investment decisions in the future. Rule number 10, focus on the big picture. Kiyosaki suggests that you should focus on the big picture when investing in real estate. This means looking beyond the short-term gains and losses and focusing on your long-term investment goals. When investing in real estate, it's important to have a clear understanding of your investment goals and to focus on the big picture. This means looking beyond the short-term gains and losses and considering how each investment fits into your overall investment strategy. By focusing on the big picture, you can make better investment decisions and build a successful real estate portfolio over time. In conclusion, Robert Kiyosaki's rules to invest in real estate provide a valuable framework for anyone looking to enter the real estate market. By following these rules, you can educate yourself on the market, focus on cash flow, use leverage to maximize your returns, build a team of professionals, invest for the long term, diversify your portfolio, have patience, take calculated risks, be prepared to learn from failure, and focus on the big picture. With these strategies in mind, you can build a successful real estate portfolio and achieve financial stability and success over time. Thanks for watching. Remember, real estate investment is a long-term strategy that requires patience, education, and a willingness to take calculated risks. By following Robert Kiyosaki's 10 rules, you can build a successful real estate portfolio and achieve financial success over time. Don't forget to like and subscribe for more valuable content on real estate investment and financial literacy. See you in the next video.
They call me a god.